Fools, Warren Buffett is one of the most famous investors in the world, and the reason why is simple. He's used a very simple investment strategy to perfection, and that investment strategy is value investing. My name's Dan Caplinger. I'm the Fool's Director of Investment Planning, and today I want to take a look at 3 things you might not know about value investing. Now, it's undoubtedly the case that Buffett's track record tells you just how successful value investing can be, but there are a lot of misconceptions about how it actually works. For instance, one thing that many beginner investors become confused about is that value has nothing to do with a stock's share price. For instance, there are a lot of stocks out there that have high share prices on them, while others have very low share prices. But remember, those share prices only reflect the number of shares outstanding. They don't necessarily correlate to the total value of a company. So when you compare 2 financial companies, Bank of America and Goldman Sachs, Goldman's share price is more than 10 times as high as Bank of America's. But when you look at its overall value, Bank of America has a market capitalization that's double what Goldman is. And so you can really get confused and misled just looking at share prices. Now, second, a lot of value investors see high earnings multiples as meaning that a stock cannot be a good value, but that's not always the case. You also have to look at a stock's growth rate in order to figure out whether those higher valuations are justified. For instance, a few months ago, Chinese internet search company Baidu was trading just above 20 times earnings. Now, that's more than a lot of people who use value investing like to pay. But for that company with its growth rate above 20%, that actually marked a good value. And in the months since, Baidu shares have actually soared 50% as investors saw that value. You can see the same thing with credit card giant Visa. Its network has made worldwide success and has enjoyed huge amounts of growth. And so even though the stock currently trades for about 24 times earnings, its growth has been high enough to justify that price for a number of years. Now, finally, don't make the mistake of assuming that certain sectors are always good values. For instance, a lot of value investors turn to defensive industries like the consumer goods sector, counting on them to perform well during market downturns. But right now, consumer goods stocks are really expensive. On the other hand, when you look at tech stocks, a lot of value investors scorn tech stocks. But right now, their earnings multiples are relatively low, even though they have decent growth prospects. And so don't get trapped by the sense that as a value investor, you can't look at certain stocks. For more on value investing, be sure to stay tuned to Fool.com. Thanks for watching, and Fool on.